Welcome to The Explainer. Today, we're going to talk about the future of your money by looking at three totally different companies. Each one tells a unique story, kind of like three different flavors of what's coming next in finance.
Okay, let's just start with this, because I think we've all been there, right? That feeling, it's just the perfect snapshot of the hype, the what-ifs, and the absolute roller coaster of modern finance. And the three companies we're looking at today, well, their stories are every bit as dramatic. So think of it like this. We're going to sample three distinct flavors of financial innovation. We've got maturity, disruption, and, well, reality. And by looking at these three, we're going to get a really good sense of the battles being fought right now and, where your money is actually headed. All right, first up on the menu is SoFi. This is our maturity flavor, and it's a fascinating story, really. It's about a company that came out of that absolutely wild, chaotic stock market and somehow actually grew up. They became a real, serious player. Okay, so to really get what SoFi pulled off, you gotta understand SPACs. You probably heard the term thrown around a lot. Basically, they were like the VIP express lane to going public. And during the pandemic, man, they were everywhere, super hot, but also, let's be honest, incredibly risky. And here's the thing about SoFi that's so interesting. It wasn't just some flash in the pan. You look at this timeline and yeah, sure, they had that initial crazy peak. But then they went quiet. They put their heads down, built an actual business, and just methodically clawed their way right back to the top. It's pretty impressive. I love this comparison because it just hits the nail on the head. That first high, that was prom night. Super exciting, everyone's talking about you, but it doesn't last. This new high, though, this is like showing up to the 10-year reunion looking like $1,000,000 with a successful business to boot. While, most of the other SPAC cool kids from that era completely fizzled out, SoFi actually did what they said they were going to do. So what was the secret sauce? How'd they pull it off? Well, it was a pretty brilliant move, actually. They transformed themselves from just a digital lending company into a complete one-stop financial supermarket. We're talking checking, savings, investing, credit cards, the whole shebang. Getting that national bank charter was the key. Now it's all in one app.
So there you have it. Our first flavor, maturity, tells us something really important. In a world that's obsessed with hype and quick wins, sometimes the slow, steady strategy of just building a real, solid business is what actually wins in the end. Okay, time for our next flavor, disruption. And for this one, we're looking at Coinbase, which is dropping what feels like a bomb on the whole idea of a savings account. Seriously, this is where things start to get a little crazy. All right, just let's all take a deep breath and stare at this number for a second. 10.8%. I mean, think about it. Your bank is sending you emails bragging about 5%, right? This isn't just a better rate. This is a shot across the bow of the entire banking industry. And this chart just lays it all out, plain and simple. You see that tiny little bar for a typical savings account, then the high yield one, and then Coinbase's offer. They're not just on a different field, they're in a completely different league. The gap here is absolutely enormous. So what's the catch? Well, this yield isn't on regular dollars. It's on something called USDC, which is a stable coin. And the concept is actually pretty straightforward. It's a crypto token that's designed to always be worth $1. It's basically crypto's version of a digital dollar you can zap around the world in seconds. And this right here, this is the truly disruptive part. You've got this massive, double-digit return on an asset that's supposed to be as safe and boring as a dollar bill. It completely messes with our definition of risk and reward. It makes you ask the question, what does safe even mean in finance anymore? So the big takeaway from our second flavor, disruption, is pretty clear. This isn't just about Bitcoin versus Ethereum anymore. No way. This is about Coinbase versus your bank. They are making a very aggressive, very direct play for your savings. All right, after all that excitement and disruption, it's time to come back down to earth. Let's talk about our third and final flavor, reality. And who better to serve us a dose of reality than a banking giant like PNC? They just give everyone a lesson in what it's really like to run a massive bank. I mean, this quote just says it all, doesn't it? Dental surgery. It's the perfect analogy. Every big bank knows they need to upgrade their core technology. It's like the bank's central nervous system, but nobody wants to do it. It's painful, it's expensive, and if you mess it up, oh boy, the consequences are huge. So here's what happened. You had this company, FirstBank, and they were right in the middle of this dental surgery, a big, ambitious tech upgrade. Then, along comes the giant, PNC, and buys them. PNC takes one look at this messy, ongoing project and just hits the brakes. Full stop.
And really, this analogy is perfect. Imagine you're marrying someone, and their house is in the middle of a huge, chaotic renovation. It's just easier to say, you know what, let's just both move into my finished house instead. For a huge bank like PNC, it's way safer and simpler to just plug the new company into their own tried-and-true system, even if it's a bit older.
And that, right there, is our reality check. We hear so much about innovation and fintech disruption, but for the big established players, the reality is that keeping things stable and making sure everything works together, that almost always wins out over a risky, ambitious tech dream. In their world, change is just really, really hard and very, very slow. Okay, so we've tasted all three flavors: SoFi's maturity, Coinbase's disruption, and PNC's cold dose of reality. So what does it all add up to? What's the final takeaway when you put these three very different stories side by side?
Yeah, this table really lays it all out nicely, doesn't it? You've got SoFi proving that growing up and playing the long game can actually work. You've got Coinbase showing that the disruptors are not just knocking on the door anymore, they're trying to kick it down. And then you have PNC reminding all of us that the big guys, well, they're big and slow for a reason. Stability matters. And that leaves us with the million-dollar question, right? You've got these three powerful forces: growth, disruption, and reality, all clashing at the same time. The future of our money probably isn't going to be defined by just one of them. It's going to be a messy, fascinating mix of all three. But the real question for you to think about is, which one of these flavors do you think will ultimately define the future of your wallet?